All right, let's talk about the mystery charts and the methodology in action. Here's the mystery chart for this week. You can see the Landry light has been really nice for quite some time. That means the lows are greater than the moving average, and it pulled back to the moving average. Landry light goes to zero when that occurs, and that is what I call a Landry light pullback. Notice that it was in kind of a gradual trend, and then it began to accelerate higher. That's also what's known as accelerating momentum strategy. And if you were to kind of use your mind's eye and lift this bar up a little bit, this straight line, you'd see that this move higher was fairly persistent, meaning that for the most part, it tended to go up day after day after day. Mathematically, that's equivalent to linear regression. I just like to draw a line through the bars. And of course, we had the pullback to the moving average there, or the parameters based on a 100K account. You'd buy 1,290 shares, and there's your risk, your entry, your stop, and your initial profit target. So I'll follow up with this one, obviously, in upcoming weeks. Any questions on this before we move on? All right, let's go. Okay, I mentioned an OGRe last week, and the reason I mentioned it was when I start these shows, I tend to do a lot of confessions. And one of the confessions was I put this on, and I'm like, okay, I'm going to go over here and look at these shiny objects. My trade station is over here, and then all my other monitors are in front of me, where I do a lot of my research and all the other good stuff. Anyway, so I'm over here doing whatever, probably looking at a kitten video, whatever. And when I look back over to my trade station, I noticed that this stock had shot up 2.5 points from my entry and then came back in. And I was very concerned that this would turn into a losing trade. I haven't done it lately, but Mike P gave me a shame bell. It says shame on there. And then I used to bring that. Shame. I guess I'll start doing that again. Kind of a silly reminder. But anyway, fortunately, it worked out for me. So I just did 100 shares. This is kind of an S&G type of opening gap reversal. I didn't fully commit to it, obviously, but I felt like I wanted to do something. So entry was there, and I just didn't want to count. IPT was 2 points higher. And then on my trailing stop, once I hit the IPT, and then once I think I was about 3 points ahead on this, I went ahead and opened up that trailing stop to 3 points. And obviously 3 points wasn't enough because I would have made a lot more money if I could have somehow held through the day. Now, these opening gap reversals, you're looking for, let me just back up a second, you're looking for a really strong trend, and you're looking for the stock to get absolutely whacked. A big, thick stock, a well-known stock like Roblox, or however you say that, would be a good candidate for this type of trade, Tesla, or kind of, I wouldn't say just the opposite of the core methodology, but a very well-known higher capitalization stock tends to work a lot better. You've got a lot of jockeying for position, and also the market makers tend to say, "Oh, you want me to buy this stock from you? You want me to buy this turd from you?" So what I'm going to do is I'm going to lower the price so damn low to where it's cheap. Okay, I'll buy it from you at this price, but I'm going to give you a really crappy price. And then what I'm going to do is I'm going to flip it out later at a higher price. And I might even, I don't know if they could actually manipulate the market a little bit. I hate to say that, but definitely they don't buy and sell to lose money. They're forced to buy and sell as a market maker, but they know what they're doing. And what you're doing in a case like this with these OGRes, especially in a big fixed stock that has a lot of institutional support, is you're getting on the side of the market maker. But anyway, the trailing stop stopped out for better than the poke of the eye. It came to about $176 overall. You do that once a day, that's a pretty good thing. But unfortunately, they don't come along every day. Anyway, I just thought I would show that it was more of a shame type of admission than it is like, hey, look at me, I made $170 on an OGRe. Because I did not place my orders for my IPT, my trailing stop, right after I placed the trade. I'm like, I'll get around to it. There's more interesting things going on over here. All right, I want to talk about the buy at B setup that we talked about in the group. And by the way, one thing I've really been noticing a lot of with IPOs, and I can maybe mention it again in the next show, but the buy at B rules, and this is a pattern to get you in as early as possible in a brand new IPO, as early as the close of day 5. And in some cases, you can front run that close a little bit, and I'll discuss that in 1 second. But one thing that's been amazing me lately is IPOs kind of heating up a little bit, and one thing that's amazing me as I'm going through my IPOs is that there's a lot of them that come public and they top out on the first day. Well, the buy at B rules say you can't buy unless it takes out that first day high, if that's the high for the week. And then other than that, you need a new closing high, which I'll show you in just 1 second. The point I'm trying to make there, believe it or not, is I have one, is I am shocked at how many IPOs come public and they make their high on day one. And that's an interesting phenomenon. And it's probably a lot more than you would think because of the survival database. Because if you have a survivor database, it means that you're only looking at those stocks that survived. It didn't go to zero, it didn't get delisted or whatever. But anyway, so day one rule, if the high is set on day one, it has to close above the day one high. And that silly little rule, if you don't walk away with anything today, for IPOs at least, that's what I was thinking earlier, just remember that. But anyway, buy at B, we were talking about this. John's our resident IPO expert, and one day we'll have to do something together with IPOs, but he does a fantastic job and with keeping up with IPOs, and he often mentions a lot of them. And it's hard to say in hindsight, but in some of these cases, I wonder whether or not I would have missed him had John not been paying attention. I'm pulled in about 1,000 different directions daily, and I'm just thinking out loud. Maybe that's one advantage you guys might have, is you're not trying to do 50 different things when it comes to the markets and trading and all this other stuff. You can maybe focus a little bit more, and then obviously the educational business is a lot of what's the word there, fires and things that chase down. But anyway, we're talking about this one, and we talked about how it's potentially going to trigger soon. So there's day one. Remember, we don't do anything till the close of day 5, and I'll talk a little bit about front running in 1 second. Day 2, day 3, day 4. Now on day 4, that's the highest close, or the new closing high, however you want to look at that, since this IPO came public. So that's going to be our buy line, and we're looking to buy market on close if the market closes above that high. So on day 5 or beyond, okay, so let's say day 5, the market sold off fairly hard. This thing could trigger day 6, day 7, and John's pointed out some longer term ones that have triggered. If you go in and watch the IPO course that I did, which I think you get free as a gold member eventually. The longer you stay a member, you eventually unlock all the courses. But one of the things I talked about was that the buy at B, even though it's intended to be this pioneer pattern to get you in on day 5 or somewhere around the first week or two of trading, it actually has some longer term characteristics. So I would encourage you, like in a case like this, it doesn't cost you anything. Set an alarm at that new closing high, okay, and to go about your life. When I did the traders retreat down in St. Lucia a few years back for Charlie Kirk, he was kind enough to invite me as a guest of honor. One thing that I got down here, I'm like, where are all the other guests of honor? Guests. He goes, you're the only one. I'm like, oh wow, thank you, Charlie. But anyway, one thing that was kind of interesting, and that's the one thing I was thinking about a little while ago, is like, it's great getting people together, and that's why I'm excited about the Facebook group, because we're all kind of there digitally, but eventually I like to get together in person. I do have one client that has offered up possibly his place to do that at some point in time. So if that's something that would interest you, let me know. I wouldn't look to make any money off of it, but I would like to cover some expenses and whatever expenses that he has in providing that. And it does add up a little bit. But anyway, long story endless, when you're in person like that, you get a lot more out of it. You can't discount the importance of face-to-face. And one of the things that came out of it, believe it or not, I have a point to the story, is that Charlie Kirk would set these alarms and forget about them, and he might have 100 or 200 alarms, and they might trigger way down the line. So I think that would be a really good thing to do with this buy at B pattern, is set your alarms and don't have them expire. So maybe a year from now, this thing makes a new closing high, and it might have bottomed out and then really nice little base, whatever. and it might be worth a shot. Sometimes these IPOs, or a lot of times these IPOs, get ahead of themselves, and they kind of implode, kind of like the day one rule I talked about a second ago, and that's the new high for a while at least. And then they go down and bottom out, and then maybe a bow tie or a first thrust or some other type of pattern that I trade would be a good pattern then, or of course the longer term buy it beat. Anyway, so I did get in a little early, which actually hurt my performance on this one. One thing I've been talking about a little bit in Facebook is an expansion of range on day 5. So if you come in and you see the stock on day 5 and it looks like it's going to really trade well above that new closing high, okay, or trade at a new closing high, in this case above the day 4 high, if it looks like the range is expanding, then you can go in and get in a little early. Now, always a little dangerous to get a little early with a pattern, so that you kind of like getting to that pioneer mode on a pioneer setup. Pioneer meaning early trend setup. But anyway, you're getting in before the entry, so there's always a danger in that, and that's what I did. Anyway, you could see 29,875, and technically around 2950 would have been your entry on a close. And I'm looking at a 2-point IPT on that one, which hasn't been hit just yet. So buy a D, probably the simplest thing I do. There are a few caveats. The range has to be there. $30 rule. This was right on the cusp of that $30 rule. It used to be a $20 rule, but now it seems like 30 works better, so I've adopted that. And ideally, you want some sort of excitement with the company. What's the story, fad or glory? If it's a brick and mortar retailer, I'll wait for a secondary setup like we did with Academy a few years back, ASO. Anyway, that's a buy at B. Any questions on that? Please let me know. Let me check in with YouTube brethren. Just a really brief update. I know I say this every week, but I'm going to keep it really brief this week. So these zones are based on the percent away from the 50-week closing high. So if it's at 0%, the market is making a 50-week closing high like it did here, and then here, and then here, and here, and then a few weeks ago. And here's what's kind of interesting, by the way, is we're just off of this 50-week closing high, which is also all-time highs. So we're within 5% of that 50-week closing high. Now, when you get greater than 5% away, as Jeff pointed out to me, he likes to think about exiting a market, and I feel like 10% for indices at least is a good round number. Now, by the way, because I use this moving average as a whipsaw filter, it has to close below the moving average, okay? There's your sell signal right there. To my surprise, it actually worked in Bitcoin. Now, 10% is not enough in Bitcoin, but with the whipsaw filter in there, it did actually work. I'm not sure you want to rush out and trade it in Bitcoin, but it is kind of interesting. And by the way, the whole idea or designer's intent, however you want to look at that, is to avoid the so-called diaper change moments, as Ian McActivey calls them. And knock on wood, and I know a lot of it's in hindsight because it went back 100 years, right? Or 120 years, whatever it was. But this would have kept you out of every bear market in history. You would get hit a little bit going into the bear market, but fortunately, even like in 1987, you would have got an exit signal on a Friday, okay? Now, whether or not you were paying attention to that, who knows? I guess when the market began to tank on Friday, you probably would have woken up to the fact that you could get a sell signal. And in a case like that, if you follow the system, you follow the system. You don't want to wait and see. Anyway, sell signal, last sell signal was there because it dropped 10% from that 50-week closing high and closed below the 50-week moving average. Buys a little more stringent. You need 2 bars of Landry light, and you're buying on the close, and that would be a calendar close. That's how I tested it. So that's what we'll keep it with. And I think it's been out about 5 years or so at least. So your sell is a close below the 50-week moving average and 10% or more away from the 50-week closing high. So when I grabbed this capture yesterday, that would have been 54.91. And I guess until we make a new closing high, that's going to stay there. So we have to take out 61.01 for this to ratchet a little higher. Anyway, as I've said ad nauseum, and again, I'll go through this quickly. This is the TFM 10% system and the Qs. The sell would be right around 479, a little bit below. You can see the moving average is now above the 10% zone. So the 10% zone would be where you would sell the market. Anyway, to my surprise, I bought it back here and just 100 shares for S&Gs, but this thing has had a pretty darn good run, about a 65% run over that period of time. And as I've said ad nauseum, when I put it on, I'm thinking like, who cares, 100 shares, this will just be S&G type of trading. And then to my surprise, it really took off, and now it's actually becoming real money. Now there's $50,000 of margin in this one position. But anyway, that's it for the TFM 10% system. I do want to keep, I was thinking earlier today, do I want to keep updating this? Yeah, I need to figure out a way to just do it more quickly and say, go watch the old video if you're interested. But I think the importance of is just showing you every week we're following the system, we're following the system, we're following the system. Not that you want to rush out and trade mechanical systems, but trading a single little mechanical system like this can teach you trend following and how the drawdowns suck and all these other things that come with longer term trend following. As I say ad nauseum, the way we've sort of solved for that, making my little air quotes, is that we use a hybrid approach to the money and position management. We take the swing trade profit off and we let the rest ride. Even on the OGRe trades, we're doing that too, okay? Taking, let's say, a 2-point profit, and then we're trailing that stop up 2 points. And then, like I said earlier, in that particular case, we let it open up intraday, trying to catch even more. Proof of concept for the Landry 100. This is an experiment I restarted, and it's been a lot of fun. I know you want to party with me. And by proof of concept, I just want to take a minute or two and explain what my thought was here and how this is conceptually correct. And momentum often begets momentum. So you have a market that starts making new highs, it starts making more and more new highs, and the FOMO kicks in, the late adopters, etc. Like right now, Bitcoin's stuck in the sideways range. We'll talk about it in just a few minutes. So I think maybe the early adopters are cashing out at $100,000 and they're making millions and millions and millions of dollars, and that supply is feeding the demand. Now, once it gets above 100K and stays there, because so many people poo-poo Bitcoin, as I've said before, somebody who you think would know better would send out his newsletter at 4,000, at 5,000, at 6,000, at 7,000, at 20,000, and so on and so forth, what bullshit Bitcoin was. And maybe it is bullshit, but as a trader, you shouldn't care. One thing about momentum is it ends badly. We talked about comes with the territory thing, like Mike Moody said, if you're gonna have a baby, babies are pretty cool. You're gonna have a lot of baby poop. Got a puppy, puppy's pretty cool, but last night after puppy wakes up in the middle of the night, he ends up in the bed, and at 3:30 this morning, he was biting my head. So if you're gonna have a puppy, they're awesome, but you're gonna get bit in the head. The real money is in longer term trends, and this shows it, and I'll show you one that's up 400% since we put it into the portfolio. This is a hypothetical portfolio that I'm running, and I'm actually putting them in at the end of the day. I'll go through my list and do my analysis. Obviously, with real money, you want to do it in real time. I have experimented with it a little tiny bit, and so far that's failed miserably. If that does begin to work out, I'll let you know. But I think one thing learned from that, or relearned, is that you do want to obviously keep your winners and sell your losers on that. One thing kind of cool is it does kind of put you in the hunt for the next big thing. You might not always get, and quite often you won't get a core methodology set up with some of these momentum stocks. Often you do, but not sometimes you won't, obviously. But with this list, at least they're on your radar and you're seeing the next big thing, and then you can figure out, okay, I need to figure out a way to get into this great trend. It does kind of prove out that breakout trading has low accuracy rate, at least initially. A lot of the ones I put on this list, when the day I put them on, it's like the next few days they just kind of implode a little bit or consolidate, and then they eventually either, of course, keep doing that or they take off. But the ones that really take off sometimes will actually trade sideways for a while before taking off again. So that's kind of an interesting thing. The outliers make it all worthwhile. which we'll take a look at in 1 second. Now, you do need quite a few stocks to ensure that you catch the outliers. I think if you just went out and traded breakouts on a few stocks here and there, I think you probably wouldn't be very successful unless we got into a rip-roaring bull market. It's kind of interesting. I don't want to go digress too far, but you have to be careful to understand the market you're in. And like right now, I'm seeing a lot of reversion to the mean gurus on YouTube, and I use that term loosely, telling you how much money you can make. Well, the market right now is doing this, as you'll see in 1 second. And yeah, that's a good market for selling options and all that crazy reversion to the mean trading. Unfortunately, when we do begin to trend again, you're going to get creamed, absolutely creamed. Anyway, so here's the list, and as I say each week, all were bought at new highs. I did a screen capture a minute ago, and this one's up 418%. So the buy was there, and that one actually would continue to go straight up after I bought it, so to speak. And you can see it's had a pretty good run, 418%. And there's some big numbers in here, 220, 200, 150, 110, 110, 110, 194, 80, and so on and so forth. A couple of weeks back, I showed the bottom of the list. The bottom of the list is not going to look too ugly. And then there's one in the list today that's getting creamed, but it'll come out tonight. And that's because we're constantly doing this window dressing. We're putting better stocks in, and we're kicking poorer stocks out or ugly stocks out. It's the employer versus the parent model. Okay, the parent, as I say quite often, anything short of mass murder, they're going to stick with the child and try to make sure the child does okay and forgive the child. Whereas a good employer is gonna kick out the dead weight and bring in better talent, or the good fantasy football player is going to get rid of the crappy players and add in better players, or however that game works. I don't know, but I think that would actually work. Nick says, I love TFM and longer term systems, even with indices, but it takes so long between the buys. Yeah, that is an aspect of it, but it's okay. I purposely designed the system with minimal whipsaw filters, but with whipsaw filters nonetheless to keep you from having too many trades. Okay, and that's the whole designer's intent, is just to keep you in the market for as long as possible and get you out when the market could be in trouble. So yeah, we have a lot more, Nick, there's a lot more shorter term stuff that we look at too. But to my surprise, as I've said ad nauseum, and if you get really bored at night, you can't sleep, stealing a line from Greg Morris, just don't operate heavy machinery afterwards. Go in and watch some of those old shows where we talked about a lot of these things, and go in and look at like the pandemic sell signals, because we had like bow tie sell signals. I think we had a TFM 10% system trigger before the bow tie signal actually triggered, which I thought was kind of fascinating. A daily bow tie, that is. So yeah, good points.